Welcome everyone to the Wharton MBA program for executives real estate panel. We have a fabulous group here with us tonight that are going to share their experiences. I'm Barb Kraft. I'm Director of Admissions for Wharton San Francisco. Behind the scenes, we have Taylor, who's helping from our team manage our technology. And along with me this evening moderating is my counterpart in Philadelphia.
Hi, everyone. Yeah, I'm Diane Sharp. I'm the Director of Admissions here in Philadelphia. And to get started, I would like to just give you a really brief overview of the program. I know some of you are well aware of the fact that today is our round one deadline, and you probably submitted your app and are just in wait mode. Others might be looking at round two, and others of you might be really early on in the whole process, possibly round two, possibly next year. But we want to give you all the information you need about the program. First and foremost, no matter which format you choose to earn your Wharton MBA, whether you choose to go full-time or executive, you are earning the same degree. Wharton is very protective of its MBA degree. We just offer you two formats. So if you're further along in your career and you would definitely not want to jump off, you want to learn and work and grow in your career, and your company is going to support you, absolutely, you'll earn the Wharton MBA in our program. So we're also one MBA, two campuses. As we mentioned at the outset, Barb is in San Francisco, and she pulls people from all over, west of the Mississippi and other countries, China, Mexico, and out here in Philly, we do a lot of east of the Mississippi, and we kind of split the center of the country, and we get folks from Europe and Asia, and it's really neat. So we want to make sure that you understand what it means to attend our program, earn a Wharton MBA while you work and while many of you have families. It's an undertaking, and that's what the folks here are going to share with you, that it can be done. And we have all sorts of industries represented, real estate being a nice solid one that we see year in, year out. Wharton is really well developed in that specialization as well. So as I mentioned, round one is tonight, and round two is February 10th. We are going to start in May. It's the end of May. We posted our calendar, our 2-year calendar. So end of May of 2021, we'll go until May of 2023, 6 terms. So it is longer than our full-time counterpart, and that's because you guys are working, and so we can't load as many classes on every term, so we have to add a couple terms because you are in class with Wharton professors the same number of hours and earning the same number of credits. So it's worth it, and you'll learn that tonight. All right, so thanks again for joining us, and you'll see on our website, and at the end we'll encourage you to post questions here for these panelists on the real estate industry and their experiences. If you're not in the real estate industry, these guys can still share what it means to attend the program. And then if you have questions about your candidacy in the program, please go to our website and submit a chat form. All right, thanks. So
Thanks, Diane.
Back to you, Barb.
We're excited to get started here, and as Diane mentioned, we get people from all different industries, all different locations in the country, and that's what we have here for you tonight. And I'm going to ask each of the panelists to please introduce yourself, share a little bit about where you're coming from, a little bit about your background, your career, what year you graduated, and when you were in the program. I think it would be helpful for the audience to know where you commuted from. Let's start with you, Angela, if you don't mind.
Sure, Barbara. Thanks for having me on, and good afternoon, everyone. Evening for those of you on the East Coast. My name is Angela Biggs. I am the Vice President of Investment for Grosvenor Americas. We are one of the largest privately held real estate companies, and we both develop and invest across office, multifamily, and retail, so 3 out of the 4 major food groups. I lead acquisition and disposition for all 3 asset classes, both in Northern and Southern California. And I graduated from the Wharton program in 2014, so 6 years ago. I did the program out in San Francisco, and I had a very short commute of, call it 3 miles, because I was living in San Francisco and continued to reside there. So thanks for having me.
Jonathan, want to jump in?
Yeah, sure, Barbara. Hi, everyone. I'm Jonathan Macias. I'm from Los Angeles. I'm actually currently in Mexico, so excuse the spotty connection. but lived in Los Angeles, still live in Los Angeles, commuted to Wharton. While I was there, I was class of 18. You know, for me, it was an easy trip up there. It's a quick flight. It's like getting on the bus and reading a few articles, maybe doing a little homework. Had a great experience. And while I was in the program, I ran my own private real estate development company. I also own a real estate brokerage and property management company. And I like to invest in a few other private investments, mostly focused in real estate and home development of luxury homes.
Thank you. Dave, let's move on to the East Coast.
Hi, everyone. My name's David Roberts. I am an East Coaster. I was in DC when I was in the program. I graduated in 2016. I still reside in DC. When I was in the program, I worked as the Director of Real Estate for the Immigration and Customs Enforcement Agency. We built prisons and office space all over the country. And then shortly after I graduated, I got a position with Hoffman and Associates, which is a real estate development firm that builds urban infill product mixed-use development in the Mid-Atlantic and the South. So happy to be here.
Ryan.
Hi, my name is Brian Flanagan. I'm also an East Coaster. Attended the WEMBA in Philadelphia. At the time, I was working for the Deputy Mayor for Economic Development in Philadelphia. So much like Angela, my commute was actually probably even shorter. I think I was about 15 blocks away from campus. So I walked. I was class of 2012. When I was with the city, I was responsible for overseeing all their real estate assets as well as all their lending and investment programs. Book of business of about $1 billion of lending and investment products and portfolio. Since then, I moved on to Jamestown Properties, which is a big real estate private equity shop. Did a little bit of time with Angela Gordon after that, and now I'm at Sterling Equities, which is a vertically integrated owner-operator of real estate, predominantly in the New York metro area.
Thank you. Any questions yet, Diane, out there?
Yeah. So hopefully you guys are getting your questions organized here. All right, so let's get started with this one. So why did you decide in your growing career to make the effort to get an MBA? So why was that timing right? Why did you choose Wharton? And we'll go in the same order. It's usually easiest in these panels for now, since people are a little unsure.
Sure. So why that was the right time for my MBA. So at the time I applied to the program, when I was sitting in your seat, I had just finished about a decade of my career, and I was thinking through the next decade and kind of entering into that mid-career phase. I felt like I had gained a lot of technical skills, but there was still that softer element that I felt like an MBA would help me out with. And specifically, two areas that I identified that I wanted to gain from an MBA was, the first is ability to raise capital. I think that's a very important part within the real estate industry, especially as you're in stages 2, 3, 4, 5. And the second was the network. The Wharton Real Estate Network is unparalleled. And I think that was something that I saw as an investment in myself. It was an asset that I will have for the remainder of my career and continue to have. And then the other forcing factor I'll share with the group is that I started my career out in investment banking, and I had taken the GMAT right when I finished the program, and my GMAT was about to expire. So it was kind of a now or never type situation. And in terms of why I wore an MBA, up until that point, I was at my third job. I started out working in investment banking at Merrill Lynch. Then I worked in acquisitions at Farallon Capital. And at the time I was working for a data center REIT called Vantage. And in each of those positions, the head of the real estate group had a Wharton degree. And so it was kind of a testament to the strength of the program And so when I really narrowed it down, and there was kind of no question where I wanted to go.
I'll go next. So for me, I didn't need the MBA to change careers. I already ran my own company, and it was really about going to the best program that I thought was out there. Wharton obviously fit that profile. I wasn't interested in going anywhere else. I remember touring the campus and thinking, everyone here has that competitive spirit, that sportsmanship that I like, that these are the kind of people that I want to be my friends, that I want to have relationships with. And that really solidified it for me that Wharton was the place that I wanted to go. Part of me getting an MBA was, to Angela's point, real estate, raising capital is very important. And that Wharton brand really just helps in investors' minds and banks' minds to think, okay, you can at least crunch the numbers. You must know something about what you're doing. So it reinforces that brand for yourself. And the relationships, some of my best friends are now all classmates. I talk to them every week. We take trips together, we hang out together, we learn from each other, we've done investments together. And I think that in itself is priceless. And lastly, as an entrepreneur, as a business owner, you tend to do things on the go. And for me, going through that MBA program, really building frameworks around the way I think, something that I normally wasn't used to doing, in a more analytical approach. Wharton really gave me some of those tools and helped me learn from others and from professors how they looked at those problems, and gave me some of those new skills and tools. So that to me was the reason that I decided to attend Wharton, and what I got out of it. I'm actually gonna move. I didn't realize the lighting is so bad here before it gets too dark. So.
I think for me, I think it was a combination of things. Angela had mentioned that her GMAT was about to expire. I think this is something that I think I was in that same boat as well, and I had sort of flirted with going in for a while, and so I felt like it was the right time. I did also know for myself that I was looking to I think make a change. I wasn't exactly sure the direction, but I think short term, I knew I was going to make a change, and then longer term, I felt like just the relationships and the network were going to be invaluable to continuing in the direction that I wanted to go in. So.
So I think for me, and it's a little frightening that I'm becoming the old guy on these panels now, because it was only it was 2012 when I was there. I actually applied to Wharton twice. I did not get in the first time, but I knew sort of deep down that, or I believed that it was the right fit for me, and I was the right fit for it. And I think it actually turned out pretty well for both of us. I was 2008 was a big eye opener for me, particularly as it comes to kind of credential and sort of skill set and self brand and a bunch of other elements of this. In that, within the firm that I was in, it wasn't as required, and that if everything had gone smoothly there and I never wanted to leave, or never had to leave, then it wouldn't have. I don't know how big of a difference Wharton would or would not have made, but real estate's also an industry where kind of lateral up is in some ways easier than kind of straight up within your own organization. And also 2008 happened, and the company that I was working for went from prominent and a couple of billions of dollars to assets under management to insolvent, to almost got out of business, to back to an existing real estate investment firm. And it became very clear to me that I needed to have the flexibility and the mobility to go to other places and to have other avenues that I could explore, other careers, or other entire just more flexibility and a greater skill set than I had and what I would get at where I was.
We have a question out there, and I know you've touched upon this a little bit, but more specifically, any major impacts that the Wharton MBA had on your career or opportunities that it presented for any of you?
Yeah, I can jump in there, Barbara. For me, it was pretty immediate. As soon as I graduated, I started networking. I knew that I wanted to go back to real estate development, which is something that I had done actually before the crash, but it had been several years. I think a big part of making that, I think there were several factors in terms of, sort of getting my foot in the door. Having talked to the founder and the president of the company, a couple of years later, I asked them pretty candidly whether that was, something that had, sort of put me over the top. And they said it was a number of factors, but certainly having the well-roundedness, having taken the finance classes that were there, I think that lended just the right amount of credibility to sort of make that happen. So I think the impact there was immediate, and certainly since I've been in my current position, it's paid dividend between the network and a lot of the frameworks that we had for the coursework. It's paid numerous dividends for me. So it's been hugely impactful.
Yeah, just to jump in, I would say the same thing. I had a very similar experience. I knew I wanted to go back to real estate private equity after I got my degree, and sort of the timing was right to where the cycle was, and was able to go back in at a very different place, and in an institutional platform. These are some of the biggest capital management firms as it comes to real estate in the world. And it's a very different perspective and a very different kind of view of your value or your skill set, having the Wharton degree. So definitely changed the dialogue right away.
Yeah, and I'll also add that for me, another interesting thing that happened for me was I ended up, because of the Wharton MBA, becoming a adjunct faculty at some of the local colleges. I teach real estate financial modeling at UCLA now, and to me that's been tremendously rewarding, almost building a second career, something I never thought that I would do. And it really just came down to you went to Wharton, you have an MBA, and you obviously know what you're doing, and I built those connections that way. So just something interesting that I never imagined going into the program, and just the brand equity that the school carries.
I think for me, the MBA has been able to enable me to take risk. So that's something that you will always have. Right out of graduating from school, I went out and started my own company. It's like a LoopNet for Chinese investors. It's very specific and niche, and ran that for 2 years and really saw through and through what it takes to build a team. And coming from a very institutional background, I was able to take that risk and know that I always have that baseline. And then now I am a mother of 2 young children, have a 3-year-old and a 3-month-old. And so I've taken some, risk off the table for the time being, but I know that in the future, if I endeavor to start my own fund, that opportunity is always there. You always have that baseline, and that's something that's pretty invaluable. I mean, I always think through when I applied to school, when I was sitting where you are, and it was 2011 at the time. I could have invested in San Francisco and quantified exactly, how much money I would have made. This is a little bit more less tangible. It's something that is intrinsic. So in addition to the ability to take risks, the other thing I feel like my MBA has for me is that I feel like I'm generally able to get a meeting, that's an incredibly powerful tool, whether it's with an investor or an executive recruiter, people see that brand and they're open and willing, not just within the network, but exterior as well, to take that meeting. And so the two institutional jobs I've taken since graduating, both of those came through executive recruiters. And so that's something that I think is of value. And the last I wanted to share with the group is confidence. I think it's something that is understated, but you really build that sense of leadership within the class. It's taught through Socratic methods. You're sitting with really respected peers, 150 people, and you have to prove your point to the professor. And it's no different than when you're sitting in an investor meeting or sitting in a board meeting and you're working with imperfect information. So I think that that's something that I was able to do, which I have with me today, and is of huge value.
Perfect, good. So we're getting a lot of questions here. One of them is classroom oriented, kind of the academic side of things. How do you feel your experiences in real estate contributed to your classmates, and what did you bring to the classroom? How do you feel that impacted? And were there certain classes that you felt were important to you?
Sure, I can jump in there. Being in development, seeing a project all the way through, real estate is very similar to doing leverage buyouts or business transactions or selling companies. And I found that a lot of the skills and tools that I learned doing development, taking those finance classes, allowed me to work with classmates from maybe a perspective that they weren't as familiar with, because we're always doing valuations, we're always looking at debt structuring, or how to structure capital, and all of those things you learn in the advanced classes. So it was great to be able to bring some of that experience, interact with classmates who do investment banking, who do it from in a little different perspective. So definitely that dynamic was there, and absolutely you contribute in all areas of real estate, right? Deal making, negotiations, whatever area you're in. I think there's something you can contribute to the class.
Yeah, I think that speaks to the heart of the benefit of the program, and being in one with so many different industries, you're really connecting the dots. I mean, I learned just as much from my classmates, and being in San Francisco, it skewed very heavily in technology. I'm learning about software and how they think about go-to-market and sales, which often is a lot more complex than within the real estate industry, and vice versa. That I could teach them about the built world, about brick and mortar, and how what they're doing transpires in the environment that we're in. More specifically to maybe how I contribute with real estate, one of the courses I took was in China, and it was a supply chain class in China where we went to 3 different cities, Shenzhen, Hong Kong, and Beijing, and we toured a lot of the factories there. And one of the I think the project that I did was on a company called Flextronics, and they're a huge manufacturer in China, but they're more a real estate company. So even though you're learning about manufacturing and supply chain, I added the value of well, here's how we value it from a real estate perspective.
Yeah, I would say a lot of the value that I got was, it's not so much sort of going deep on real estate related things, but it was sort of the the ecosystem of some of the other management courses and frameworks, which has been a huge differentiator for me at the current firm that I work on. Like, for example, even sort of HR related things, we get asked to do all sorts of different things, but one of the things just randomly is we need to come up with a new internship program to sort of bring people in. And so being able to reach back and talk to someone that was in our group that was the head of HR for a startup, I could sort of quickly plug in and see if they had any sort of good materials, and have several times been able to sort of turn something around like that. Whereas I thought a lot of the colleagues that I have are very sort of deep into real estate with maybe design backgrounds or real estate masters or those kind of things, but it was sort of the broader management experience has been very, very useful.
So when you apply to Wharton, you're just committing for year one to a particular coast. So we ask that you apply to San Francisco or Philadelphia, but year two is all electives. We have the largest selection of electives of really any business school in the world. And that's where there becomes a lot of flexibility. So if you're interested, you could swap coasts for year two, for a term, for a class. And I think maybe some of you may have done that in year two. Could you share that or share any of your experiences? This person would like to know with the elective portion of the program. Did you specialize? Did you major? And before I forget to mention, as a Wharton alum, you know you can come back and audit those electives at any time in your life, as long as there's space in the classroom. So we hope to see you back soon.
So I'll jump in because actually sort of switching coasts was not an option when I was at WEMBA. But I did have a concentration in finance, and it was a deliberate choice. I think it was I really wanted to understand kind of how capital markets work. I came from the real estate development side, so I knew ground up construction. I knew kind of how project management and team management, and it's basically what I had done in my career up until that point. So I really wanted to learn about capital markets, and went in as deep as I could in kind of all from macro to micro to LBOs to private equity to regression model, macro investing, and all those things. So the thing that was amazing about Wharton is that they do have that wide variety of classes, so that if you wanted to, you could, whether you want to focus sort of narrow and deep or wide and, wide and a little shallower, it's all there. And it was, so that was just my experience with it as far as the selection and the ability to have exposure to it. I was also fortunate that I was in Philly, so I could have access. I don't know if they still do this, so I apologize, Diane and Barbara, if you don't. But it's if you were local and could sort of petition to the school that there were even options to go to some full-time stuff. If space and availability permitting. So that was a great opportunity being local and the school being easily accessible.
Yeah, did any of you do an independent study? Because that's how people who might not be able to access any real estate classes per se could connect with a professor. That's another option in the second year. But yeah.
I will say I had a lot of fun when I was there, and I could not make up my mind. So I actually double majored in finance and entrepreneurship. And I ended up one semester going to both coasts because I didn't want to switch coast and miss out with networking. So I was flying out every weekend, one weekend to San Francisco, the other to Philly, red eyes going in and out. And I think I was one credit away from quadruple majoring, but that wasn't the goal. It was really just, the amount of knowledge, the amount of exposure, the things you can learn in all fields, marketing, entrepreneurship, finance, even the real estate classes there that are offered. I just couldn't get enough. So I decided I would do that one semester. I think about it now, and I would never do that again, but I was glad I had the opportunity because I did learn a lot. I built relationships on both coasts, and it was a great time. There's just so much you can take in.
Yeah, if you have the bandwidth, yep, make it happen. There's a couple in every class who attempt that. I can go ahead and grab the next question. And actually, this is one from someone who's interested in how you guys feel that COVID is impacting the real estate market. So let's test your knowledge of real estate. You've seen any impact, or what do you feel that the future might hold, at least near term? Any thoughts?
There's a lot baked into that on all sides here, so I'm sure we have a lot to cover. I mean, yeah, we have some projects we're trying to get out of the ground. Obviously, the financing is tough depending on sort of where that is. It's been interesting because we do, really mostly urban core, and that's been sort of where most of the investment's been in terms of residential. But more recently, lenders are kind of shying away from bigger checks and doing like suburban product, which is something for cities like DC has been, very different. And we do build a lot of apartments, so we're looking at, sort of what types of things are lasting, that will sort of last beyond this versus, sort of what is maybe just, an immediate impact, which is there. So a lot of, touchless doors, entries, those kind of things, COVID proofing, a lot of sort of, mechanical systems that sort of, are geared towards, the right sort of circulation. So I think there's some lasting impacts there. And then from a macro perspective, we're seeing, this obviously is going to have a big impact on the office market, which was, I think, shrinking. It probably is shrinking even more, but there's, opportunities in urban cores that have a lot of office product to maybe sort of flip those to residential too. So it'll be interesting to see how it all shakes out.
Yeah, I can talk through the 3 areas that I invest in. So obviously retail, as we know, is hurting the most, and we own a portfolio of high street retail in Union Square. It's just difficult there in terms of no foot traffic and being so driven by tourism, how that's going to shake out. Fortunately, the larger retailers are now global, so they're able to continue to pay rent. So it's just kind of weather the storm there. In terms of office, similar to what David said, a lot of firms are kind of rethinking their footprint. I think the term that they use now is distributed workforce, where you're having major offices in different areas rather than centralized in one headquarters. So you're seeing a rise in places like Arizona and Colorado, places where cost of living is a little bit lower, but you're able to work seamlessly via GoToMeeting and Zooms. And the last, multifamily, I mean, it really hasn't skipped a beat too much for us. People continue to pay rent. Every month we were monitoring, our asset managers were monitoring what the delinquency levels were, and they dropped to as low as kind of mid 80s, but a lot of the core product was still in the 90s. People continued to pay rent. So the kind of saving grace right now has been interest rates, and we continue to see such low rates on our new acquisitions that it's kind of everything's holding steady. We're in the midst of getting appraisals done right now, so it'll be interesting, but I will say that valuations are down roughly up to 20% in the Bay Area. So it's quite a bit, but it's nothing like we saw in the great financial recession.
Yeah, I'll just to jump in for a second is that yeah, I mean we're more on the development side, so it's more about kind of the financing pieces of this. But just to give kind of two anecdotes to this, and we read a lot about kind of distributed workforce or the death of retail, and it's getting a lot of press and it's very popular to print. And I'll just give kind of 2 anecdotes is that, Jamie Dimon at JP Morgan Chase and at Goldman Sachs, they both kind of called everybody back to the mothership. And I don't think it's because they're just evil people, and efficiency was as good as it is in the office as it was at home. So I think there's I don't think we're going to see, this is just my personal view, is I don't think, while a lot of people are thinking about it, I don't think the office is going to change as much as you might read about in the press. And it was interesting, just specifically at Goldman, they started by calling back everybody who's a managing director or higher from a seniority perspective. So then, of course, every vice president and associate and analyst wanted to get back into the office too, even though they weren't allowed. So it's, right now when everybody's at home, it's very easy for people to stay at home. When people start going back to the office, it'll be interesting to see who wants to be where and kind of how this plays out. But it will have an impact, and real estate will change. I think we just don't know yet what it's going to look like.
Yeah, I wanted to add to what Brian said also in terms of thinking about office. Culture is still so important, and whether you're onboarding new hires or you're just building team morale, it's still important to be physically in the office, and that's just something that I think will not change. And then being in the Bay Area, tech companies have been working from home for a long time now. Anytime I did a property tour of an office building on a Friday, everything would be empty. So it's kind of no different. There will be some sort of hybrid where I feel like the ability to work from home is seen as a perk to the job, but you still want your physical space there because it's important in terms of coming in and also moving up.
And I'll just quickly add, I'm in the single family market, and that's actually performed really well, which was unexpected because a lack of inventory, there's not a lot of development. Just to echo what everyone was saying, some banks have completely closed their development departments and are not financing, but the banks who have existing relationships are looking for people to lend to. And it's very interesting because of their underwriting processes can vary so much. And we found that where one bank completely will deny a project, the other one is trying to leverage you even more. So it's a really interesting environment. I think that rates they've said they're gonna stay low. They're gonna give people more purchasing power. Lack of inventory is giving the price pressure up, at least in Los Angeles. On the brokerage side, we're seeing things list and be sold within a week for single family. There's a lot of value in the home office now, having a pool at home, a lot of the in-home entertainment because of what's going on. We'll see how that trickles across the board when things start reopening and there's more inventory and people are trying to move again. But at least we've seen a lot of price pressure up in parts of LA because of what's happening, which was surprising, I think, to everyone.
I have a question about the impact of the alumni network and your class network. So could you talk about how that's impacted you both during the program and after?
So, sorry, I'll just jump in on this one because I can't remember who it was, but somebody came in, and I don't know if you still do it, but they gave this it was a great sort of one of the speeches at lunch, and it was about kind of like the different levels of contacts that you have, and kind of like first degree, second degree, and third degree, and sort of it has to do with like your inner circles of how close you are to those people, and then your sort of work colleagues, and then sort of the people who peripherally, professionally. And I feel like within that there is actually a WEMBA circle somewhere where it's sort of closer than your peripheral professional friends, maybe not as close as like your close contacts. But I was changing jobs from working for the city of Philadelphia and the deputy mayor to real estate private equity. And I would say on the WEMBA front and the alumni network, I think my hit rate is probably like in the high 90s as far as just reaching out to people randomly. No contact. They weren't the class above me, below me. I've emailed people who are literally 10 years older than me or more, and they have always responded. And it's whether it's a phone call, an email. I randomly emailed a guy who was literally I was class of 12. He was class of 02. He was at UPS at the time. I needed a contact at UPS. He connected me to the head of real estate and the COO of the company, and never met the guy, never spoke to him. Sent him one email randomly through the alumni network, and he kind of jumped right on it and was willing to help me. Hit rate's not quite as high with the full timers, but still very good. I'd say it's probably 50-50, maybe 60-40. No, it's been absolutely amazing. And even just emailing people who, frankly, at the time had no business talking to me, they usually would give me, 20 minutes, half an hour of their time, even if I was just trying an informational interview to understand kind of how I fit into the real estate world and where there could possibly be opportunity. So the network has been fantastic.
Any other thoughts, anyone?
Yeah,
Yeah.
you know, again, and I'll
Oh, go ahead, Jonathan.
go ahead, Angela. Yeah, so I just wanted to add again that you know, the network is priceless. I've done investment deals with classmates. I just got off the phone today with Clint, one of my classmates. Barbara, you know Clint. I spoke to Johnny again today as well. I mean, you build these really great relationships with like-minded people that would have never crossed paths with anywhere else. You know, Clint is the CFO for um, private equity company, and Johnny is in textiles. You know, these are just people that bring so much value to your network, to your frameworks, to your life, that you wouldn't cross paths with any other way. They build those connections, those investment bridges, those relationships. You know, I've met so many people through some Wharton alum. Even at the Jonathan Club event that they have down here in LA, I went down there, and one of my best friends was a full-time Wharton MBA who graduated, you know, 10 years before me, and it turned out he lived 5 minutes from my house. So, you know, we became best of friends. So you know, to echo Brian's point, the relationships that you build, you just get instant access, and you have that commonality that helps you build those relationships.
Yeah, so since graduating, we formed a informal real estate Bay Area group where we would get together for happy hours. Hopefully that comes back in, you know, a few quarters or so. And what's interesting about that real estate group is that you're not siloed based on being a WEMBA. We have WEMBAs, we have full-times, we have undergraduates, and everyone's all different years, and we kind of just meet and get to know one another. And it's really interesting because you build that connection whether you're doing a deal with someone else on the other side. I sold a multifamily building last year, and one of the potential investors, she worked for Greystar, and she was a Wharton grad, and that's all we had in common, but that was enough to like build that instant kind of bond. And there's also a formal real estate listserv where job opportunities get floated. People are asking for domain expertise. Hey, I'm interested in ghost kitchens. Does somebody have any background in that? I emailed out when I was going out to NMHC last year if there were other Morton folks who'd be interested in meeting up, and we got a small group together. So that there's that formal connectivity that happens post graduation. That is, you know, you have that for the course of your career. The other thing I wanted to add is the amazing level of speakers that we have when we're in school. You're often getting people who, when you're reading a case study, there's always a protagonist because you're learning about management, and that's really people making decisions. And I remember there was our first year we take a managing people course with John Paul McDuffie, and I was reading a course on Cisco and how they did M&A in the 90s, and the protagonist was Charlie Giancarlo. And when I was at the data center company, he was happened to be one of our investors and sat on our board. And so I was in a meeting with this guy once a quarter, and I was reading about him in my case study. So I used that as an advantage to invite him into class. And you know, he's being so aware of the Wharton brand, he came in and spent a whole afternoon with the class, and you really get behind the scenes decision making that you might not get in a different program. And that was something that just blew my mind. So it was a great experience, and that was just one of many speakers that we had during our program.
Looks like a couple of the people viewing this tonight are interested in getting into real estate. So they're in business and they are thinking about Wharton. Do you see that as happening? You guys seem to have stayed in real estate in different aspects of it, and conversely, if you come in with real estate, do you think a Wharton MBA would allow you to make a switch to another industry?
If a Wharton MBA can't do it, I don't know who can. I'll say it that way.
Yeah, I think I think it's totally doable. I mean, I was sort of been in real estate, you know, kind of in both sides of public and private, and sort of made that switch. Although, you know, for me, I think, you know, the government experience was a totally different industry. So it absolutely, you know, it absolutely worked for me.
Yeah, yeah. I mean, I'll just throw in there is that you know, if the desire is to get into real estate, you know, there's the Zell Laureate Institute at Wharton. You know, Wharton was the first MBA program to offer a concentration in real estate. When I was there, it was still run by Peter Linneman. Subsequently by Joe Jerko. I don't know if he's still running it or not. But it's, you know, it is the premier real estate research institute, I would say, in the world. Maybe it's certainly in the United States, without a doubt. They have, you know, a fall and a spring meeting that is kind of, if you're in real estate private equity, is the must-attend event or events of the year. And, you know, even somebody like Mike Bassatelli, who was the CEO of Vornado for a long time, who's a HBS, Harvard Business School graduate, right? Like, he doesn't go to the Harvard Business School real estate conference. He goes to the Zell Laureate, right? And there's a reason why. And so it's, as far as the contacts and the network, you know, because it was the first business school to have that, the number of professionals in the industry who come from Wharton is really disproportionate to anywhere else.
Yeah, and I want to plug real quick the career support that the executive MBA students get. We have Don Graham in Philly and Steve Hernandez in San Francisco, and Karina Myers, who supports both. Figuring out what you want to do, that's year one. They help you do that. And once you figure that out, they help you understand how to leverage the Wharton network, as these guys have been sharing. I mean, there's an art to it. You want to make the most of those conversations. Between the research centers, the curriculum, and the support you get for the career aspect of things, you've got all the tools, like Jonathan said.
Yeah, and I like to add the clubs as well. I joined the real estate club, and they actually have amazing resources. They had an online class where they were teaching real estate financial modeling that was private to the Wharton Club. You know, they had their own resources. They have a career book. They constantly send out career opportunities for Wharton MBAs only who are part of the real estate club. And surprisingly, it was a great resource, even being here on the West Coast, and it was mostly run by full-time Wharton MBAs. I even watched some of those modeling classes to you know, sharpen up, because they're that good.
Thank you for sharing that. How about the biggest surprise to you in the program, whether that was about your classmates, the curriculum, the environment? Biggest surprise.
I would say it was how much fun it was. Not to say that I wasn't expecting it to be fun, but it's, I mean, between the professors who keep, you know, what could be really dull, boring subject matter. I mean, you know, discounted cash flows are not exactly the most engaging things to discuss for 3 hours. But it's, you know, the professors have a really fun, charismatic way of delivering this stuff. And, you know, or Peggy and her style of teaching accounting, again, which is not always the most fun subject to learn about accounts payable and accounts receivable. And then the social aspects, and, you know, sort of going out and just hanging out with classmates, or, you know, competing over fantasy football or whatever it may be, is, you know, it all blurred a lot for me, the work and the play and kind of everything else, because it just all was a lot of fun.
Yeah, and I'll add the how close you know, I became with my classmates. You know, you expect to go in and you study with these people and you learn, and but you know, a lot of them have become my best friends. I mean, I didn't expect to that they would be that close. to me, and I think that in itself is priceless.
I guess what surprised me was there's a reason why the Wharton brand is so strong, and part of it was that I was genuinely surprised by how rigorous the program was. You know, I'd come off of doing 100 hours in investment banking and thinking like, oh, I can handle. You have school, work, and personal life, but it's a very rigorous program, and so you're really getting a true, it's not, everyone keeps reiterating it's not watered down, and that's exactly what it is. You're getting the full program and everything that comes with it, but that's also what is so amazing and inspiring about the program. You come out of it and you're like, wow, I've done this, and you're taking statistics class with guys and gals who have PhDs in statistics from like the highest universities in India, and you're hanging in there with them. So, and they could be teaching the course at a different college. So the rigor was definitely something that I was very impressed with. And the other thing is, I was living in San Francisco at the time and going to school in San Francisco, and it really almost felt like I was in a full-time MBA program, even though I had my pre-Wharton life that was still going on underneath. There was just so much intensity and so much connection with my classmates that it was just these 2 years where my kind of day-to-day, everything that I was eating, breathing was the MBA program. So you really feel, you know, I feel like I got that full-time experience, which is what I was looking for.
Yeah, I would say, yeah, I mean, in some ways, the biggest surprise was, was myself, I guess, to some degree. When I started, I had a pair of twin 1-year-olds. So it was definitely juggling a lot. And as Angela said, there's definitely a lot of coursework. I mean, that's no joke. And my job at the time was pretty intense too. So I think coming out the other side, having done all those things and enjoying it in the process, was I think Angela had mentioned before, it's a real confidence builder to some degree. So I think once you come out the other side and sort of realize that you can manage just those very sort of different things and just feel much better off for it sort of at the end of the day. So I didn't expect that coming in.
We have a question from someone who's interested in learning if there's international real estate opportunities. If any of you guys have had that exposure, if you feel that that's something that the program could support opportunities for.
I can speak to that very well. I mean, I was building a company where I had investors in China that were looking to invest in the US, and took the opportunity. I had 2 different classes that I took in China where I was physically there. I had a lot of frequent miles at the time. So was meeting with folks there, and similar to kind of the themes that we've talked about, would reach out to people, find them on listserv or the Wharton, kind of internal LinkedIn that you have, and reach out to them and set up a coffee meeting. So that was great, as well as touring properties out there. So mine was specific to China.
Anyone else? So we're getting close to our hour. Any parting words? You have these anxious people on the line that are considering an MBA. Any parting words or advice for them?
I think I'll go first. And this kind of goes to the surprise question, or maybe should have realized it before I got there. But I remember very clearly the first kind of weekend at Wharton when you're going through your sort of orientation, and we were sitting there, and there's like a big, for my year at least, there was like a big outdoor barbecue thing, and I remember sitting there and realizing that with my 100, I think we were about 120, maybe 130 in my class, is that any endeavor, I was in real estate at the time, but any endeavor I wanted to pursue, all of the disciplines to make that happen leave Wharton aside for a second, we're literally at that dinner, right? So I had classmates who are in private equity who, you know, whether it's angel phase capital, A round, B round, C round, you know, bigger checks in the, you know, sort of Sequoia Capitals of the world, or, you know, the very small $500,000 check to get a business started. And whether it was real estate, tech, strategy and management, transportation. We had a couple of people who were in oil and gas, you know, ex-military. It's the diversity and the resources, you know, and then you can, you know, multiply that, and or it grows exponentially when you start thinking about the alumni network and the faculty. That power didn't really dawn on me until I was sitting at that first dinner, and it became very clear that kind of the world and the potential, and maybe even my own potential, was much bigger than I had realized kind of prior to that moment, particularly with the access and the foundation, the academic foundation. So I think that was just, for me, that was kind of a very powerful moment, sort of just learning about kind of Wharton and what I was getting into and would be a part of.
I'll say that I remember being in the position of should I apply now? Should I ever apply? I actually went and interviewed, and then I didn't apply that year. Felt like it wasn't the right time. And I'll just say that it's never the right time. It's like having kids. You're never ready. You're never going to be ready. It's really just, you know, what someone told me, a friend of mine for nonprofit that I work for told me, you can always apply and decide not to go if the time isn't right. And I think really just putting your foot out there and going through that process and realizing that it's never going to be perfect, and you just have to get in there and go through it. I mean, I think now I don't think I could apply now, but that's how I felt then, and I went through it, and it was one of the best experiences of my life, and I was glad that I did it. So I would just say that no matter what's happening in the world, what you're going through, I think just make that step to get to that point, because you can always make the decision once you're there.
Yeah, John, you sort of took the words. I had jotted down no perfect time. So Jonathan, you took the words right out of my mouth. I looking back on it, you know, if I could have, I probably wish that I maybe have done it, you know, a year or two sooner even. So I think everybody struggles with, is this the right time or the perfect time? And I'm not sure that exists, but you know, I think it's you know, I think you just gotta, you know, I think if you feel like you've assessed it and you've got sort of, you know, the right intentions at heart, then you should just go for it.
For my parting words, I think the application process can be a little bit overwhelming / daunting, but it's really well thought out in terms of what they're asking, what the school is asking of you. So first, I think I don't know if this still exists, but when I was doing, there was an essay asking about getting the support of the people around me and making sure that I had buy-in from everyone. And that's not lip service, because if you do not have the buy-in from whether it's your partner or your family or your work, it's going to be that much less of an enjoyable experience, and you won't be able to get out of it as much as you would if you truly have everyone, you know, kind of the wind behind your back. The other element was, in terms of writing the essays, kind of treat it as a goal setting. You'd be surprised what you put down will happen. So even if it's a 5-year goal, 10-year goal, it's like those things, once something comes out of your mouth or you kind of put it into the universe, it happens. And so don't be afraid to be ambitious. That's one thing you're going to get out of this program, is your level of ambition will just continue to grow. I think Brian talked about it early in the webinar, and treat this as a true opportunity of, you know, thinking through what matters most. And I think one of the topics that you guys were talking about was impact. What impact do you want to make in your career? So just think through all of those, be honest with yourself, and have fun with your essay.
Perfect. That's great. All right. So thank you. Yeah, our hour's up, and want to thank everybody who's watching, and especially want to thank our panelists for sharing their thoughts and experiences with us. So Barb and I look forward to hearing from you in the future. Please reach out if there's anything we can do.
Yes, thank you all. You're getting great shout outs on the chat. It's fabulous. Thank you. Good seeing you all. Take care.